name's Nathan. I'm an accounting support specialist here at FreshBooks, and today we're going to be talking about bank reconciliation. So first we'll talk about what a bank reconciliation is, why you might want to complete a bank reconciliation, and then finally how to do one within FreshBooks. So let's get started. So first, what is a bank reconciliation? So the word reconciliation or reconcile just means matching. So when I say that I'm reconciling my bank account to my accounting books, I'm just matching transactions that took place in my bank account to entries that I've entered into my accounting books. So in the past, this could just be done by having a paper copy of your general ledger, a paper copy of your bank statement, and going off with a pencil and checking off one by one, making sure that everything that happened in your bank account also got entered into your accounting books or into your general ledger. Another common way to do this is to do a reconciliation for a period of time, like a month. You would just take the opening balance of your reconciliation, so say the first of the month, what your bank account balance was, and then at the end of the month, what your bank account balance was. You take the difference, and then you take all of the cash entries that you've entered into your accounting books and add them all up and make sure that they match the net change in your bank account matches the total transactions that took place in your accounting books. In FreshBooks, we bring over all of the transactions that have happened in your bank account through a bank connection. We bring that over so then you can match each transaction that happened in your bank account with transactions that you have entered into FreshBooks. We'll go into more detail how to do that towards the end of the video. Now let's talk about why you would want to do a bank reconciliation within FreshBooks. So there's two reasons. The first just being accuracy. When you're comparing your entries that you've made into FreshBooks against the bank statement, you're just ensuring that it's accurate. You're ensuring that these transactions you have entered into FreshBooks are tied to an actual transaction that took account in your bank. That way, if there's ever any questions about the accuracy of your books, either by yourself or your accountant, auditors, it's a lot easier to prove that at least that section of your books and at least that account on your balance sheet exactly matches your bank account, and there can be no questions that your books are actually accurate. The second reason is just ease of workflow. There are just certain things that are just easier to record through the bank reconciliation screen than any other way within FreshBooks. So for example, owner's equity. So if you're paying yourself out of your business every week or every month, if you're not using bank reconciliation, that will take journal entries. You have to make manual journal entries to record those equity transactions. If you're using bank reconciliation, you can just simply mark as owner's equity, and these transactions become a lot easier to deal with, and your workflow is just a lot easier. There's a lot more examples of that, how it makes your life easier, and we'll get into more specific details in our next section. Now that you know what a bank reconciliation is and why you might want to use it for your business, now let's talk about how to actually use it. So first, you'll have to connect your bank account. We're not going to go into detail on how to do that today because it depends on what region you're in and what bank you use. So you can find instructions here. If you go to the bottom right to our help center here, you can find instructions on how to do that and any other help you might need. So for today, we're going to assume that we have a bank account connected. So we go to the accounting tab here on the side, and this bank reconciliation tile is the first thing we see. Now when you first connect a bank account, you will see this set your opening balance. So before you can start matching transactions, it's going to ask you to set an opening balance. So first, we're going to choose our reconciliation start date. So here we can go and we can select the date that we want to start reconciling. So I can start as of April 1st, and I will hit continue. And now it is asking for my account balance as of the start date. So as of April 1st, what was in my bank account? So I will go into my bank statements or into my online banking and look at the amount that was in my bank account as of April 1st. So it's important to remember that you will want the balance as of the beginning of the day of April 1st before any transactions happen that day. So you might want to find the closing balance of the day before and use that as the opening balance of April 1st. And so on April 1st, I'm looking at my bank statements and I had $950.63 as of March 31st. I'll hit continue, and now I'm ready to reconcile this account. Before we start reconciling, we can always change the opening balance and the opening balance start date that we just set by going to More Actions and Reset Opening Balance. So if you want to change the start date or change the balance that you entered, you can just go to Reset Opening Balance here. So now that I have my opening balance set, I'm able to go in and start reconciling. The first thing we want to do, especially right after connecting and right before we start reconciling any transactions, is we want to look at this bank account balance on this side here. This bank account balance is what is in your bank account as of today. You'll want to verify that with your bank statements or with your online banking to make sure that this matches what's actually in your bank account today. If it doesn't, it can be caused by one of two things. Either your opening balance wasn't set correctly, or some transactions didn't come over properly onto the left side. So again, before we start reconciling anything, we want to make sure that this bank account balance matches what's actually in our bank account as of today. If you do find that you are missing transactions here on the left side, you can always add transactions by clicking Add Bank Transactions here. Here we can add in transactions line by line by selecting the transaction type, so either money in, money out, the date, the amount, and then a description. We can also add multiple at a time. We can also edit or delete transactions, so if you have duplicate transactions or just need to edit a transaction that has the improper amount or description, you can just select it here and then go to Bulk Actions on the top and click Edit. That will open up a similar screen to the Add Transactions button, but where we can edit this existing transaction. We can also delete this transaction. So if I click Delete and Confirm, I can scroll down to the bottom and I can do View Deleted Transactions, and we can see this is the transaction that I just deleted. And then we can always undelete these deleted transactions in our deleted section if we need to. So really the only reason to use these features, the Add Bank Transaction button, as well as the Bulk Actions, Edit and Delete, is if the left side for some reason is not matching what's actually in the bank account. Once we've confirmed that, we can go ahead and start matching entries. So when you connect your bank account, any money out entries will get automatically created and put into your expense section. So we can see this $473 on February 8th has a matching transaction down here that was already created. So I can select those two, and because the amounts match, I can click the green match button here and match them. When you match transactions, they'll disappear from this screen because this screen is only showing unreconciled transactions. And we can toggle over and see what we just matched in the match section here. As I mentioned, money out transactions will have expense entries automatically created for them. Money in transactions, however, do not. You'll have to create these yourself. You can add in invoice payments in the Invoice tab, add in other income entries in the Payments tab, or you can do all of that within this screen as well. So if we look at here, I received a payment for about $1,200, and I do not see it on the right side here. So I can go create new entry, and I know that I have an invoice created, but I just haven't added the invoice yet. So I can do invoice payment, and I can search through my outstanding invoices to find the invoice that matches. And here we go. Here's the invoice that matches for CNP Property Management for that amount. Next. And now I can quickly add in a payment entry just within this screen. So it was a bank transfer. I can see that it was on January 14th. And there we go. Now I can add a payment. So I can quickly add a payment on this screen, and now it will be available for me to match if I just scroll down to January 14th. And now I am able to match this away. You can also create expenses, other incomes, or bill payment entries through this screen as well. For other entries that don't fall into the classifications that we talked about, we have this Mark As button up here. So for transfers, especially between connected accounts, so for example, if this is my checking account and I'm paying off another connected credit card account, that's just transferred between my accounts. But I don't want that to show on my profit and loss because I'm not actually taking in or paying out money. I'm just transferring within my business, within my accounts. So for circumstances like that, we can grab a transaction. I'm just going to grab this one here, and we can mark as. Now we can mark as transfer. When you mark as transfer, an accounting entry gets made to this bank account showing that money either left or entered the bank account, and then the other side will go to the petty cash account or just your general cash account. When you mark the other side of the entry in your other bank account, it will also go to the petty cash account. This will cause those two entries to balance out to zero because one will be going in, one will be going out. So it will have a net effect on that account as zero, but it will reflect these changes in the connected checking account and credit card account. So your balance sheet is correct. You're not double counting this as income or expenses. You're just marking it as transfer and just moving it between your connected accounts. Similarly, you can mark as owner's equity. So if you yourself as a business owner, if you are withdrawing cash from your business or putting cash into your business, you can quickly mark this as owner's equity, and a journal entry gets created to reflect this in your equity account. You can also mark as expense refund. So if you have money coming in that was just a refund for an expense you already paid out, you can mark as expense refund. You can add the category that you are applying it to, and then you can hit submit. As you're matching entries together, it's important to remember that any edits to any FreshBooks entries will cause those entries to become unmatched. So even if you're just changing the description or vendor or the amount, it will cause that matched transaction that you've already matched up to become unmatched and show up in the unreconciled section here. You want to think of the bank reconciliation as your final stamp of approval on these transactions. So as you're reconciling, take a good look at your expenses that you're matching to, making sure that the vendor is correct, the date is correct, the description is what you want it to be. Because when you reconcile it, you're basically saying everything looks great, everything matches my bank, and it's good to go, and I don't want to look at it again. Of course, you can always go back and look at it and change. You'll just have to go and match it again in the bank reconciliation. Okay, so I just went ahead and matched the rest of the transactions in my bank account. As you can see, I have no more unreconciled bank transactions left. And if we look at my bank account balance, it matches my FreshBooks balance. So it is reconciled, or in other words, matching. Like I said in the beginning, that's the whole point of a reconciliation, is to match my bank account balance with what's in my accounting software, or in this case, in FreshBooks. If you ever have all of your bank transactions reconciled and your bank account balance isn't matching your FreshBooks balance, that's almost always going to be caused by journal entries that are posted to the bank account in the chart of accounts. So when you post a journal entry to your bank account, it will change the FreshBooks balance, but it's not able to change the bank account balance. So that means when everything's reconciled, the bank account balance and FreshBooks balance won't match. So this isn't ideal, so we suggest not to make journal entries directly to a connected bank account. If you need to make journal entries to record some transactions that you can't within the main tabs of FreshBooks, then we recommend marking that transaction as transfer. So as an example, if you have a capital asset purchase, so say you bought some equipment that needs to go to your balance sheet and not your profit and loss, and not as an expense on your income statement, you can simply mark that transaction as transfer in the bank reconciliation. that will show it as reconciled, and we'll change the bank account balance to reflect that transaction. As I mentioned before, marking as transfer will move the other side of the entry to petty cash. So you can make the journal entry from petty cash to the custom asset account, or that whatever account that you need to hit on the chart of accounts to properly reflect that transaction. If that just went over your head a little bit, that's totally okay. You can always invite an accountant free of charge to your account so they can help you with these kind of entries, with capital assets, with loans, that's kind of thing where you need to make journal entries to the account. They can totally help you and guide you through that. So that about covers bank reconciliation. We talked about what a bank reconciliation is, why you might want to use it, and then finally how to go through it and how to do the steps to do a bank reconciliation. I wasn't able to cover absolutely everything today. If you want more resources, you can always go down to the Help Center here. We have lots of articles about bank reconciliation that'll talk about what we covered today and plus some. So if you have more questions, you can always go there to the Help Center or reach out to support if you're absolutely stuck, and we'd be happy to help you. Thanks for taking the time to listen to me today, and I will see you next time.